Hello everyone, and thank you for taking the time to watch this video. It's Tuesday, March 4th, 2025. Before we get started, I wanted to remind everyone that trading involves risks. Leverage trading carries a high level of risk and is not suitable for everyone. You may lose more than you invest. This presentation is for educational purposes only and is not a trading advice or recommendation. We do have a busy week ahead of us with important economic data to watch out for. But before we jump into economic data, this morning the tariffs were implemented. 25% tariffs were implemented on Canada and Mexico for all their exports or for their exports to United States. An additional 10% of tariff as well was added to the initial 10% on Chinese export to the United States, and all went into effect this morning. We are going to look into USDCAD in more details, into tariffs in more details, and the impact on the FX exchange rates as we go on. This week our economic calendar has two major events, or actually more, but we need to keep an eye on the most important two events that we're covering in this video. We have the European Central Bank is scheduled to announce its main refinancing operations rate and rate on deposit facility. This is scheduled for March 6th, Thursday, March 6th of 2025. We also have the ECB monetary policy statement and the ECB press conference that traditionally follows the monetary policy statement and the rate announcement. Core inflation in the Eurozone has stabilized near the 2.6% since the second half of 2024. However, the updates to the tariff situation, although the EU has not been impacted yet. However, we will see how the European Central Bank comments will be tomorrow in regards to their tariffs concerns. On Friday, we have a set of economic data from the US, the non-farm payroll, the average hourly earnings, and the unemployment rate in United States. According to the analyst surveys, the forecast for non-farm payroll is to be at 160,000 jobs added to the economy compared to 143 for the prior months, and the unemployment rate is projected to remain at its current level of 4%. A quick look at the Canadian economy. At the moment, it's navigating between strong economic growth fueled by low interest rates, and on the other side we have a tariffs concern. The Bank of Canada aggressively cut interest rates over the past year, which helped the Canadian economy expand by stronger than expected 2.6% annualized in the fourth quarter of last year. And as inflation continues to decline in Canada and the economic data supports keeping rates or cutting rates even further, or keeping rates at a low level, however, at their current level. However, the tariffs concern has actually pushed traders to take a different look. When we checked interest rate cut expectation by Bank of Canada, which is actually scheduled for March 12th, the upcoming meeting, yesterday we were looking at 50%. Today 90% of participants, according to the Bloomberg analyst surveys, are looking at a 25 basis point cut for the upcoming Bank of Canada meeting, and most likely this is a result of the fears from the impact of tariffs on the Canadian economy. Now we're going to look at technical analysis for USDCAD, or the US dollar versus the Canadian dollar, and we are going to look at multiple time frames, starting with the monthly chart to see the overall or the big picture for price action. The chart we're looking at now is the monthly chart, and we can see that prices been trading within a wide range, as high as 140 and as low as 120 approximately since 2015 until now, so approximately 10 years. Price action attempt to break above the level in 2016 and again once more in 2020. It only succeeded to break out and break above the resistance level in November of 2024 following the US elections. Price broke out, continued to accelerate following the breakout, especially as the US President Donald Trump continued to mention implementing tariffs on Canada. On February 3rd at market open early in the month, this is the red candle we are looking at, the US President Donald Trump reassured the markets again that the tariffs will be implemented, and we had a market that gapped up at open. However, throughout the course of the day and the week, as we will see on the upcoming charts, price action has actually reversed and continued to decline. On the monthly chart, we have a dark cloud cover for last month's candle, and we have this month's candle attempting a small correction so far. We will see how this develops. It's only been 4 days in March, or actually 2 trading days since the month began. We had an uptrend here represented or marked by this blue line, the intersection of the dotted red line, which is the baseline for an inverted head and shoulders. So we have a confluence of support near the area of 1.4026. It's the annual pivot point of 1.4026. We have a resistance level which was broken, this black line, and now will become a support level. We also have this dotted red line which was broken earlier in November of 2024, will also become a support level. So we do have a critical level of support below price action to keep an eye on. That also includes the support represented by the blue trend line. RSI is at overbought levels near its level 70 on the monthly chart. This is the weekly chart for USDCAD, and as we can see when we zoom out of the chart, we can see that to see the overall context, we have 2 areas of interest, area A and area B, where price action has been trading within these levels for an extended period of time. This is past. As we move closer to the present and what's happening now, again, this is the weekly chart. The red candle that we see here is a bearish engulfing candle, and this took place on the weekly close on the same week we mentioned that opened February 3rd, which we mentioned when we spoke about the monthly chart just now. So we have a bearish engulfing candle. On February 3rd, the US president tweeted earlier that the tariffs will be implemented on Canada and Mexico. And then later on in the afternoon, Monday afternoon, the US president came to an agreement with his counterparts of Canada and Mexico, and they agreed to postpone the implementation by 30 days, by 1 month, which is today. Tariffs went into effect today. But at the time, we had a bearish engulfing candle, price dropped, followed by another candle. And at the moment, as the tariff implementation went through, we have price action attempting to break back up above to the levels where it was before. On the daily time frame, we have price action that's moving within an ascending channel, and this is again February 3rd that we just went over. Price action broke below the support level or the lower border of the ascending channel, attempted a pullback which so far did not reach or was unable to reach the extension of the broken line. We may have a short fall in place. If price action remains below this resistance level, then we may have a short fall in place. The monthly pivot point, the updated monthly pivot point, is at 1.4470. We have a confluence of support below price action near the weekly pivot point, and the intersection of 2 moving averages just below the price action. And we can see the intersection here will be a confluence of support, as we just said. I wanted to remind everyone that we will be streaming live webinars during the European Central Bank on Thursday at 8 o'clock in the morning New York time, as well as on Friday with the non-farm payroll at 8 o'clock in the morning Eastern Standard Time. And thank you everyone for taking the time to watch the video. Please read the following disclaimers carefully and manage your trading risk.